In this video, we're gonna be going through the step-by-step process that you guys requested. If you haven't watched the previous video, go ahead and watch it. I'm gonna put the link up there. The whole idea of making a step-by-step video is to achieve three things. First, we have to remove all the emotions from our trading. Second, we have to keep it as simple as possible. And third is to avoid overtrading, which is something that all traders are facing. So we are going to try to build a system, not just a strategy. We are going to have 6 steps to follow. I'm going to put a Notion template for the checklist of the 6 steps. In each step, there are rules to follow, but I cannot cover everything in one video, so I'm going to be going through the 6 steps, and then I'm going to be making separate videos for the rules of each step. So if you guys are interested in that, let me know in the comments, and which step specifically do you want me to focus on. Step number 1 is higher time frame bias and context. So on the 4 hour, what do we see? We see that there's a huge imbalance right here, right? Okay, this is the origin which caused the break of this structure right here, right? But we have this origin and we have this impulsive move, okay? This impulsive move was retested right here, okay? Like, what I mean by retested is that this is the upper candle which they bought to sell, and then they came back and they closed their position, which means that this is not an extremely high probability area to look for short setups from here. While this area, it has never been retested before. As we can see, there's a huge imbalance afterward. So our bigger area of interest will be here. Okay, this one was retested. But even if someone made the mistake and took this area of interest, when we go to further steps, it will not give us an entry, that's the beauty about a good system. Okay, so for now, we know that the price wants to go higher. As we see, we broke right here. Okay, we understand that the price wants to go to this area because of this liquidity right here and this imbalance. Okay, and this is on Monday. During the week, we can take trades going higher to reach this area, okay? But for now, I want to keep it as simple as possible until we reach this area. So step number 2 is define our areas of interest, okay? Areas of interest, this is the topic that most people struggle with. And I'm going to give you 3 rules to follow. I have 5 rules. I'm going to give you in this video 3 rules, because if you want me to make a video about just the areas of interest, I mean, this is the hardest thing, because if we know where's the area that the market's gonna reverse from, then we can be millionaires like right away. But there are rules and criteria that help us make these areas higher probability than other areas. So for example, rule number 1, did it break something? Did it reach an objective? Did it change something in the market? As we can see, this area did an impulsive move that broke this structure. This area did an impulsive move that broke this structure. So this is rule number 1. Did it make an impact? Did it break something? Okay, this is rule number 1. Rule number 2 is this the origin or the impulse move? This is the impulse move, and this is the origin of the move. So those are 2 different areas. Always the origin has higher probability because there's some liquidity to be taken before reaching it, which gets us to rule number 3. Is there any liquidity to be taken before reaching this area? And yes, there is. And also there's a huge imbalance. And if we cannot identify the liquidity, then we are the liquidity. This is the rules to identify the area of interest. We have to go deeper into that. The higher time frame, the more probability of this area to be more powerful and to hold more and to see a reaction from it. Now, step number 3. Step number 3, put an alert and wait till the price reaches our area of interest. We do not chase price. Price will come to us. Wait for price to come to us, okay? So I put this step on purpose, just so we can wait for the price to come to our area that we want to see the reaction from. This is just for patience, okay? So as we can see, it reached our area of interest and we saw a huge reaction. But this happened during a news event. It was FOMC, I guess. And we do not trade news, so we actually not gonna trade this. Okay, even if we go down and see a setup for us, we're not gonna trade news. That's how it is. Now, what can we do then? We have to go down to our lower time frame to see which area can we identify in this move that we can see a reaction from. As we can see, if we go to the 1 hour, we can take all this area, okay? Or if we go to the 15 minutes, this is all this area, we can refine it to have this buy to sell. The 3 rules of the area of interest. It broke structure. There's a liquidity before it, which is all this imbalance right here, okay? Rule number 3, is it the origin or the impulse move? Basically, this is the origin and this is the impulse, but as we can see, they are really close to each other. So we can take all this area right here, or we can refine it to here and wait if we're gonna see a reaction here first. If not, we're gonna see the reaction here. Okay, so now all we have to do is wait for the price to come back to our area of interest. This is step number 3, right? When it comes to our area of interest, we're gonna go through step number 4. Okay, now the price comes to our area of interest. Which timing? Time is very important. Be aware of time. I didn't put it as a step, but time is very important. So, step number 4, go to the lower time frame when the price reaches our area of interest. Okay, so now we go to the 5 minutes. We can even go lower to the 1 minute. And what do we see? This is still it's step number 4. We have to identify the last order block which caused the last high. So in our example right here, what is our last high? Here. What caused this huge, this big candle right here? So this area caused this high right here. But this is the impulse and this is the origin, isn't it? So we have 2 areas. This caused the first break and this caused the second break. Okay, I hope you're following. It's all in step number 4. Step number 4 now in the lower time frame is to wait for the break of for this low or this low. This is up to you now to put stricter rules or less strict rules. So basically you can wait for the first one and take trade from here, or you can wait for the second one and take trade from here. That's up to you. How strict do you want to be on your rules? So I always like to see the origin taken before I start to look for short. Let's see what happens here. So we need to see not a wick close, a body close like this one. Okay, so this is our break of structure. This is the first sign that we could go lower. But for me, this is not enough. I would like to see the origin taken. As we can see, if we actually want to take the trade, we can take it from this area and we can put our stop loss above this area, Y above this area. We're going to go through that in step number 5. Okay, now what do we see? We broke also the origin. Okay, we also broke the origin of the move. Now this is more signs that we are gonna go lower. So when this happens, where did the move happen? Where did the move happen that broke the structure? So we have this right here, okay, and we have this order block right here, which caused also the break of this area. So step number 5, identify the area which caused the break of structure on the lower time frame. This is our lower time frame, and this is the order block which caused this break of structure, and this is the order block which caused this break of structure right here. Okay, so we identify that. Now all we have to do, which is step number 6, put a limit order. So guys, the thing that we are getting huge RR is just because our stop loss. But why? Because everything makes sense. This is the order block that we are gonna react. or this one. Okay, so why should we put our order block, our stop loss this high? Like why? But if you want to put it above, you can. Okay, this just makes your risk reward a little bit higher, which is totally fine, but that's up to you. You can either take it like from here, because I don't see any other place that it will react from. Maybe from this area, so it can be like above it, or we can take one trade from here and one trade from here with a huge RR. That's totally up to you to make it either strict or not. So what are we waiting for? We're waiting for the price to come here, and our targets, we're gonna go through our target. Okay, as we can see, the price come and put us in. We don't want to see it go above this. Okay, this is the order block, the origin which caused this break of structure. This is the origin, this is the impulse. Okay, we don't want to see this taken out. Now, step number 6 is trade management. We're not gonna go through that. We can do another video about it. One more thing, one more tip we have to focus on, which is really important. Look how much room we have to move. Look how much room we have to move. This is a low resistance area. And this is very important because if the price was going like this, it's harder. Like you see, this is a very high resistance area. Okay. But since we have huge moves like that, then this is a low resistance area and we can expect the price to go lower. Okay. Yes, it seems unrealistic, RR. I understand that, but I'm taking you through the whole process of thinking, you know. I'm showing you what works. I'm sharing my journey. So if you appreciate it, just please give me a subscribe and like, and I will really appreciate that. It will help me give you more content. So as we can see, that look how many times the price comes back to this order block. 1, 2, 3 times. So if we really don't have patience, and if we don't trust our plan and our idea, it's very hard to stay in the trade, especially because we actually got, I'm gonna do it again, let's say 3 RR just by from here to here, you know. So it is hard. That's up to you, how if you want to have fixed TP or the TP of higher time frame target. So guys, I'm gonna make a Discord to talk about this strategy, to talk about our struggles, to help each other. And I'm gonna just let 50 people in at the beginning to see how it goes. If you're interested in that, follow me on Twitter. I have a new account, and DM me. I will send you the link for the Discord. And I'm just gonna open it for 50 people at the beginning, and then we will see what happens later. So if you're interested in that, please follow me on Twitter, DM me, and you will get the access. And I'm gonna share the Notion template below so you guys can benefit from that and go step by step of it for everything. Okay, and as we can see, the price just went lower. I'm not cherry picking this happened this week, and I'm taking you through the whole process. Okay, this is the trade. I hope you enjoyed this video, and if you enjoyed this, then you'll definitely enjoy this one right here.